Hello everyone, and welcome back to FX Limit, where we decode the complexities of the financial markets and provide you with sharp insights to make informed decisions. Today, we are diving deep into the world of currencies and exploring how fundamental analysis can help us gauge the potential impact of natural disasters or climate events on currency values. It's a topic that's increasingly relevant in our interconnected world where the ripple effects of a disaster can be felt across the globe, affecting economies and markets, including the realm of foreign exchange. When disaster strikes, the immediate focus is on the human toll and the physical devastation. But for traders and investors, there is an additional concern: understanding how these events can influence the value of a nation's currency. Let's break down the process of analyzing these impacts step by step. Firstly, when we talk about fundamental analysis in the Forex market, we're dealing with a range of economic indicators and political events that can affect a country's economic performance and stability. However, when a natural disaster occurs, this shakes up the normal data and introduces a level of uncertainty that requires a keen analytical eye. The initial response in currency values can often be a knee-jerk reaction to the news. Traders might pull out of a currency due to perceived risk, leading to a depreciation. Conversely, there might be a rally if investors believe a swift recovery will follow, or if significant aid and reconstruction efforts are anticipated. To evaluate the longer-term impact, you have to consider several factors. First up is the scale of the disaster. The extent of the damage is a critical determinant of its economic impact. The more severe the event, the greater the potential disruption to the country's economy and, by extension, its currency. For example, a large-scale disaster can destroy infrastructure, reduce productivity, and require substantial government spending to address the aftermath, all of which can weaken a currency. Another critical aspect to consider is the economic resilience of the affected country. Developed nations with robust emergency response systems and insurance mechanisms may bounce back quicker, limiting the long-term impact on their currency. In contrast, a disaster in a developing nation without these systems in place can have a more pronounced and prolonged economic impact, leading to a more significant and lasting depreciation in currency value. Insurance penetration is also a pivotal factor to ponder. Countries with higher insurance penetration can manage the financial impact better, as private insurance payouts can help to mitigate the economic cost of disasters. This means less strain on government finances and a quicker economic recovery, which can support the currency. Furthermore, the timing of the event in relation to the economic cycle is crucial. A natural disaster hitting during a peak growth period might be absorbed more effectively compared to one occurring during an economic downturn, where its impacts can exacerbate an already fragile situation. We also have to look at the potential for reconstruction and recovery efforts. Often, there is a phenomenon known as the reconstruction boom, where the rebuilding process can lead to increased demand in certain sectors, possibly leading to a stronger currency in the medium term. Lastly, the market's perception and the reaction of monetary and fiscal policymakers to the event can sway currency values. If the market perceives that the response will be strong and efficient, with ample fiscal measures and monetary support, it could limit the negative impact on the currency or even lead to appreciation if investors see an opportunity for economic renewal. In conclusion, evaluating the impact of natural disasters or climate events on currency values using fundamental analysis is a complex but essential task. It requires understanding not just the immediate effects of the disaster, but also the broader economic resilience, the capacity for recovery, and the policies enacted in response. At FX Limit, we'll continue to explore these nuances and provide you with the insights you need to navigate the Forex market effectively. So, stay tuned, and don't forget to like, share, and subscribe for more content like this. Thank you for watching, and see you in the next video.